Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Friday, the 10th of December, starting off with Ben's Creek, which continues within the rising trend channel from the end of October. Floor of the channel around 32 pence, top of the channel heading towards the 50 pence area, maybe by the end of next month, something like that. If you want to see evidence of further momentum, and end of day close above that December resistance line at 36 pence is probably the thing to shoot for. Moving on to Deep Verge, which had a solid announcement today. And here we've had the shares sort of two steps forward, one step back type of affair. But current situation is that we're holding that main uptrend line from March last year. That was running around the 22 pence level. We've broken above, or we closed above the 50-day moving average yesterday at 25 pence. And above that, we should be able to hit the initial resistance there back from May around the 33 pence area over the next couple of weeks. Big picture target, the longer we stay above 22, the greater the chance of a move towards that March resistance line projection at 45 pence, maybe on a 2 to 3 month time frame if the shares can break through 32 pence. Greatland Gold is next, and although the price action maybe doesn't look like much at the moment, just thought I'd highlight it in the sense that there has been some bullish divergence, so lower lows in the price for December, but higher low for the RSI. So that suggests that we could be or see an imminent end of day close above 14.5 pence, which is a November resistance line, taking the shares back up to the November resistance area around 17.5, perhaps over the next 2 to 4 weeks. Something like that. NanoSynth looks like that particularly charting on that worked, or so far has worked, touch wood. Here we saw some bullish divergence, I think yesterday or the day before, and basically that was on the basis of that uptrend line there from back in November in the oscillator chart. We had a lower low for December, narrowly lower low there, and 0.55 to 0.6 holding, and then we see the snap higher that we've had today, which is almost magical in the way it worked. Could get up to the 1.1 pence level, which is the 200-day moving average on an end-of-day close above that near-term resistance line at 0.8. So above 0.8, looking for 1.1, and that would take the shares back to the main resistance that we've had for much of this year, or at least the post-September period on the daily chart. This stage only really back below the 50-day line, 0.68, really delaying or questioning the potential recovery argument at NanoSynth. Really good contract today from Open Orphan. I think it was $13.4 million, so powering away there. And the feeling that I had earlier in the week that the shares could be in a broadening triangle from July looks to be right. We've gapped up today on the news, and an end-of-day close above the 50-day moving average at 20.25 should be enough to get the shares into the mid to upper 20s, perhaps by the end of this month. Best case scenario target at the moment up to 30 pence at the top of the channel, or the triangle rather, hopefully by the end of next month. 30 really below 18 pence currently is negative on the price action. Moving along to President Energy. And here you can see the shares bouncing off that broken April resistance line. That was around the 2 pence level. We've got the 50-day line just below it. So above the 50-day line at 2 pence. We're looking for 3 pence, which is the top of the April 2020 rising trend channel for President. And maybe we could see that by the end of next month if everything goes as it is at the moment. On to Pathfinder, which has flicked up off deeply oversold levels, which was number one. Also the floor of that rising trend channel from the beginning of last year. That's around 0.55. End of day close above the 200-day line at 0.68 could take the shares up to nearly a penny at the top of the channel, maybe as soon as the end of this month. Just a couple of stocks to go now. First is Rockhopper, which I think I looked at earlier in the week. Here we had an island reversal, very impressive one. So gapping down in September and gapping up in December, holding the gap after a slight dip below the top of the gap, but nothing too painful, and certainly holding above the 50-day moving average. Current view is that above that neckline resistance from October at 7 pence, we could see the shares or not only retest the 200-day line as they already have, but head a bit higher than that, perhaps up towards the last peak for the stock back in the summer around 10 pence. So looking reasonably good in terms of the charting picture there above 7, looking for 10 plus on Rockhopper over the next 4 to 6 weeks, or perhaps even sooner. Another example of bullish divergence working has been Tirupati. And so here we had a bear trap along with the bullish divergence there at the start of the week, and we've seen the shares hit their initial target that we had at the 50-day line at 82. Current position is that what we want to see the stock remain above initial December resistance at 72.5 pence. While we're above that, then the stock could head up to the low 90s again. If you're cautious on this situation, then you wait for an end of day close above the 50-day moving average before assuming that the recovery is going to have legs. That's it for me today. More updates over the weekend.